June home sales drop, record high prices, and economic uncertainty. Imagine this. You're eager to buy a home, but the market is as hot as a summer day in Los Angeles, and prices are soaring to unprecedented heights. Welcome to the current state of the U.S. housing market, where high interest rates and economic uncertainty are putting the brakes on home sales. But here's where it gets controversial. The situation is even more pronounced in Southern California, mirroring the broader trends across the nation. Picture this. It's Sunday, July 13, 2025, in Los Angeles, California. The sun is shining, but the housing market is cooling down. Sales of previously owned homes in June took a dip, falling 2.7% from May to 3.93 million units on a seasonally adjusted, annualized basis, according to the National Association of Realtors, NAR. Analysts had predicted a much smaller decline of just 0.7%, but the reality was more stark. Interestingly, sales remained unchanged from June 2024, which might seem like a silver lining, but it's more of a storm cloud in disguise. Let's break it down. This report is based on closings, which means the contracts were likely signed back in April and May. During this period, the average rate on the 30-year fixed mortgage fluctuated wildly, spiking above 7% a few times and never dropping below 6.8%, as reported by Mortgage News Daily. This volatility is a significant factor in the current market slowdown. Lawrence Yun, the chief economist for the NAR, put it bluntly, high mortgage rates are keeping home sales stuck at cyclical lows. He went on to suggest that if mortgage rates were to drop to 6%, we could see an additional 160,000 renters becoming first-time homeowners, leading to a surge in sales activity from existing homeowners. But will rates drop? And this is the part most people miss. The broader economic concerns are keeping mortgage rates stubbornly high, with the average rate currently at 6.77%. Now, let's talk supply. There are 1.53 million units for sale at the end of June, a 15.9% increase year-over-year. This represents a 4.7-month supply at the current sales pace. For context, a 6-month supply is considered balance between buyers and sellers, so the market is still favoring sellers. But for how long? And is this sustainable? The median price of a home sold in June was $435,300, up 2% year-over-year and another record high for the month of June. This marks the 24th consecutive month of annual increases. Yun attributes this to multiple years of undersupply, noting that home construction has lagged behind population growth. This is a significant barrier for first-time home buyers trying to enter the market. But here's a thought. Is this a market bubble waiting to burst or a new norm? Sales are particularly strong at the higher end of the market. Homes priced below $100,000 saw a 5% annual drop, while those between $100,000 and $250,000 rose 5%. But the real winners are homes priced above $1 million, which jumped a whopping 14%. Higher-end homes are also selling faster than those priced below $500,000, spending an average of 27 days on the market compared to 22 days last June. First-time buyers made up 30% of sales, down from the historical average of 40%. The share of all-cash deals remained high at 29% of sales, up from roughly 20% pre-COVID. Homes listed received an average of 2.4 offers, down slightly from 2.5 last month and from 2.9 a year earlier. So, what do you think? Is the current state of the housing market a cause for concern or a sign of things to come? Share your thoughts in the comments below. Do you see this as a temporary blip or a long-term trend? Let's discuss.